Hi, my name is Marshara binti Maidin. So, I'm going to present about the basic introduction about the Harta Lega versus Top Glove. So, Harta Lega and Top Glove is basically two factories which produce hand gloves made by rubber. Their main product is hand gloves, but they also supply like condoms, tire like for the car. Yeah. So the similar of the two factories is Top Glove and Harta Lega. Both supplies hand gloves. So Top Glove expanded their operations widely outside of Malaysia too, but not Harta Lega. Harta Lega only have two factories, which in Selangor, in Sepang, and if I'm not mistaken in Subang. So yeah. So Top Glove was established in 1991, while the Harta Lega was 1988, 3 years before the Top Glove. So Top Glove consists of 51 factories in 7 countries, including Malaysia, Thailand, Vietnam, Brazil, Germany, China, and States of America. So Top Glove and Harta Lega are strong competitor as they are needed, especially in healthcare industries and food and beverages. So these both company will use a lot of hand gloves as they provide services to the clients, right? So they have to use hand gloves to prevent bacterial or any virus. The main products of Top Glove is hand gloves, condoms, face masks, dental and surgeries, dams, exercise bands, household products, and so on. Like they produce a lot. Not only hand gloves, but now we are talking about the hand gloves. Like we are specifically about the hand gloves. While Harta Lega also supplies a lot of the gloves made from the rubber, but today since our focusing is on hand gloves. So Top Glove use a lot of material like neutral latex, PVC, what else? Polychloroprene and flaxsealant. While Harta Lega only focus on quality, which is latex neutral, polychloroprene and polysoprene. So hard to pronounce. And then the potential customers of the Top Glove is, like I said, the healthcare industries, laboratories and clinics, food and beverage, side industry. Side industry also use the hand gloves. While the Harta Lega, their potential customers also same. Their target market is healthcare industries and clinics, dental, surgery, life science, general cleaning and housekeeping, safety and security, spa and salon, and also veterinary is for the pets. For the pet, we have to use like a bit tight because the pet sometimes can scratch your skin, so we have to provide better glove and thick rubber.
Hello everyone, my name is Hazmira binti Mushri. So I will explain the financial performances of Harta Lega and Top Glove in financial year of 2025. So both companies returned to profitability after several difficult years due to weaker post-pandemic glove demand. In terms of profitability, Top Glove performed better. It recorded 3.49 billion revenue and 154.42 million profit before tax and 109.07 million profit after tax. Compared with Harta Lega's 2.59 billion revenue, 47.95 million profit before tax, and 74.54 million profit after tax. So Top Glove also had a higher profit before tax margin of 4.4% compared with Harta Legas, which is 1.9%. Next, for their operational efficiency, Top Glove was also stronger. Their EBITDA reached 454 million ringgit with a 13% EBITDA margin compared with Harta Legas 201 million ringgit and 7.8%. However, Top Glove had higher finance costs of 32.01 million ringgit, while Harta Lega only had 2.06 million ringgit. In terms of their financial health and asset efficiency, Harta Lega performed better. They had only 6.85 million ringgit debt and 919 million net cash compared with Top Glove, which is their Top Glove is 827.75 million debt and 298 million net cash. Harta Lega also had approximately 6.9 times inventory turnover, indicating their effective inventory management. So overall, Top Glove was stronger in profit and operational performances, while Harta Lega was stronger in financial stability, asset efficiency, and earnings quality. Therefore, Top Glove mainly suit investors who seeking for higher growth, while Harta Lega may suit those that prioritizing stability and lower financial risk. That's all. Thank you.
Hi, my name is Narayana Shabika Betty Zainuddin. My student ID is 20220902019. So today I will present about stock performance. For this stock performance, I will compare between two companies of glove in Malaysia, which is Top Glove and Harta Lega Holding Sendirian Berhad. So for the stock performance in 2024 to 2025, I will compare this using a stock return, PE ratio, PB ratio, and dividend performance to assess which offer better investment result. So for these years 2024 to 2025, we can see that Top Glove outperformed Harta Lega over these 2 years, which is Top Glove deliver better stock return in both years. So why is this stock performance matters? So stock performance matter because both stock is highly volatile due to post-pandemic glove industry cyclicality. So let's take a look for two critical factors, which is valuation and dividend income. So for the first valuation, the PE ratio shows how much investor pay for each ringgit of earning. The Top Glove, the PE ratio of 75.92 times, it is very high and reflecting its recovery pricing. And then for Harta Lega, for year 2025, the PE ratio was 86.1 times, but on a trailing basis, it's around 20 to 21 times, much more reasonable. For the PB ratio, compares price to book value. The Top Glove trade at just 1.03 times book value, while Harta Lega is at 2.8 times. This suggests Top Glove looks cheaper relative to its net asset. Then for the dividend comparison, now the dividend critical for income investor. Top Glove resumed paying dividends in for year 2025 at 0.48 cent per share. a positive signal after a loss-making period. Then, but Harta Lega paid 11.41 cent, which is including a special dividend and maintained payment throughout the downturn. So for this one, Harta Lega dividend yield range up to 6.32% compared to Top Glove's modest 0.9%. For investors seeking income, Harta Lega is clearly superior for them. Then, for investment conclusion and key takeaway opening, based on our analysis, here's the bottom line. For the 2024 to 2025 period, Top Glove is clear the winner of the stock performance. It's deliver higher returns in 2024 and show greater resilience in 2025. But here is the important nuance. Better past performance doesn't automatically mean better future investment. So we can see that Harta Lega also offer 3 advantages better than Top Glove. So for the first one is more reasonable valuation on trailing PE basis, and then significantly higher dividend yield, which is 11.41 cent, better than Top Glove, which is 0.48 cents. And then for this it also proven dividend consistency throughout the downturn. And then for the last one is risk warning, shows that how you understand the industry. However, for both stock remain highly cyclical, which is the Top Glove industry faces ongoing risk. This is the ongoing risk: global demand fluctuation and oversupply, pricing pressure, rising raw material costs, and then intense competition from regional manufacturers. So for the final recommendation here, what should investor do? So for the investor, if you're seeking capital appreciation and can tolerate volatility, so for Top Glove is offers stronger rebound momentum. And then for investor who prioritize income and value, Harta Lega dividends and reasonable PE make it more attractive. And then for the most investor, usually for all investor, consider a balanced approach, which is they will wait for clearer industries to stabilization before the committing. And then for the summary of all this, the Top Glove win the 2024 to 2025 better. But Harta Lega may be better positioned for long-term value and income for investor. And then for the right choice depends on your investment objectives and risk tolerance. That's all for me. Thank you.
Hello guys, I am Hossein Abdisam. Now I will explain the growth opportunities of Top Glove and Harta Lega. Top Glove focus on expanding its business into more global markets, and the company is also investing in automations and digital technology to improve production efficiency and reduce cost. In addition, it is also expanding its premium glove products and is strengthening its sustainability practice. On the other hand, Harta Lega focus on innovations and high quality retrievable gloves. The company invests in research and development, advanced automations, manufacturing, and sustainable production to improve efficiency and maintain product quality. From as an investment perspective, Top Glove has higher growth opportunity because it is global expansion and wider market reach. In contrast, Hartalega offers more sustainable long-term growth through innovations, premium product, and advanced technology. So, in overall, Top Globe is suitable for investor looking for higher growth, while Hartalega is a better choice for investor who prefer long-term stability. Thank you. Now let's look at the risks of the both companies. For Top Globe, one major risk is its exposure to international markets. Market change in tariffs, trade policies, and regulations can affect its exports. It also faces rising cost for raw materials, energy, and labor cost. Another challenge that Top Globe can be faced is strong competitions, which can put pressure on selling prices. On the other hand, for Hartelega, the main risks are slightly different. The company can be affected by changes in global demand and global price, but it also depends heavily on advanced technology and automations. So many technical or cybersecurity problem can affect its operation. So for both companies, inflations, higher interest rates, and global economics slowdown can also affect their cost and demand. So in overall, we can say that Top Globe is more exposed to global trade and competitions, while Hartalega has greater exposure to technology and operational risks. That's all for the risk analysis. Thank you.
Hello, Miss. Now I will continue with the target price valuation and final investment recommendation for our companies, which is Hartalega Holding Berhad and Topcroft Corporation Berhad. For the target price valuation, we use the price to earning method. This is because they both are same manufacturing company, which is rubber cloth company. Therefore, using the PE multiple allow us to compare the two companies based on their earning and estimated share value. For the formula we apply is target price equal to EPS multiplied by the selected PE multiple. For our analysis, we apply a 30 times PE benchmark to both companies. We use the same benchmark for both companies to make the comparison consistent and fair. The target price calculated from the method is when compared with the current market price. If the target price is higher than the current market price, it suggests that the stock is undervalued and could be potential to capital appreciation. If the market price is lower than the current price, the stock may be considered as overvalued under our valuation assumption. So let's move to the actual valuation result. Here we can see the target price comparison between Hartalega and Topcroft. For Hartalega, the current share price used in our analysis is 1 ringgit 11 cent, while its EPS is the 3 cent. Using the 30 times PE benchmark, the 3 cent multiplied by 30 gives us a target price which is 90 cent. While we compare this target price with the current market price of 1 ringgit 11 cent, there is a difference of negative 21 cent. This means the Hartalega current market price is higher than our estimated target price. Therefore, based on this valuation, Hartalega appears to be slightly overvalued with limited upside potential. While for Topcroft, the current share price is used is 64 cent, while its EPS is 0.023 cent. Using the same 30 times PE benchmark, the 0.023 cent multiplied by 13 gives us the target price which is 69 cent. The target price of 69 cent is higher than the current market price of 64. This means it's giving a potential upside of 5 cents per share. Therefore, Topcroft appears to be slightly undervalued based on our valuation. From this comparison, we can see that Topcroft provides more attractive valuation opportunity because its estimated target price is above its current market price. Now, based on this valuation together with our overall analysis, we can move to our final investment decision. Based on our overall analysis, our recommendation is to buy the Top Glove Corporation Berhad. This is because there are several reasons behind this recommendation. First of all is valuation. As we can see from calculation, Top Glove estimated target price of 69 is higher than its current price of 64 cents. This will be indicate potential for capital appreciation if the market price moves closer to our estimated target price. Second one is global market presence. Top Glove has a strong international presence and serves customers across different markets. Its large production scale and established customer base provide the company with strong position within the global glove industry. Third one is growth potential. Although the glove industry experienced a decline in demand after the COVID-19 pandemic, long-term demand for disposal gloves is supported by healthcare, laboratory, pharmaceutical and food-related industry. Fourth one is Top Glove has been focusing on operational improvement, including the automation, digitalization and cost optimization. This initiative can help the company control cost and improve efficiency over time. Okay, based on these factors, if we were given 10,000 to invest today, we will choose Top Glove. However, there are still several risks that investors should consider. These include the normalization of global glove demand, changes in raw material and energy costs, foreign exchange fluctuation, strong competition from another glove producing countries, and changes in government or industry regulation. Therefore, our recommendation is not based only the target price. We also consider the company overall business position, growth opportunities, and risk. And to conclude, both Hatalaga and Top Glove are established companies in the global rubber glove industry. However, based on our PE multiple valuation and overall analysis, Top Glove offer the more attractive investment opportunities. Its target price is above its current market price, while its global presence, operational improvement, and long-term growth opportunities provide further support for the investment decision. Therefore, our final recommendation is buy to Top Glove Corporation Berhad. Thank you.